Cement stocks climbs on the back of a sectoral upgrade coming in from UBS. The brokerage believes that the rough patch of the sector is coming to an end. Upgrades Ultratech, Ambuja and Dalmia to a buy rating.
IT stocks gain, and the IT index is in fact the top sectoral gainer on the back of a good handover from Wall Street as Nasdaq surges close to 2% overnight after CLSA's upgrade yesterday. UBS also turned positive on the sector, expecting near-term rebound in multiples.
IREDA climbs more than 3%, now up around 1.5% after the Reserve Bank has revised priority sector lending norm guidelines. Among the key changes is the eligible loan limit, which has increased in the range of 35 to 50 lakh rupees.
Suzlon trades high after Motilal Oswal initiates coverage on the stock with a buy rating. Target price at 70 rupees, expecting an EPS CAGR of around 63% till FY27.
Hindustan Copper trades with cuts of nearly 2.5%, while Polycab is about 3% higher. Both these stocks move as they exit the F&O banned list.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam. And as you could see to the top of the screen, the Nifty is holding very, very strong. However, the mid-cap index today, after a few days, is doing a relative underperformance. The Nifty Bank, though, doing well. And the one that's come back into shape, Mangalam, is the tech index. That's been a relative underperformer. We pointed this out earlier this morning as well. It's at a very, very crucial juncture. Fundamentally, a couple of brokerages have upgraded the sector, and also it's currently at around the 20 DMA. Still a rank underperformer in 2025 so far, but the tech index is the one that's showing some signs of recovery. Yeah,
it has been an underperformer in the past as well. What's interesting is, however, after a 1600, 1650 point rally on the Nifty itself, some pause for breath, or perhaps, the markets consolidating at current levels is usually par for course, more so in the mid-cap end of things where, the rally has been a lot harder. So maybe some bit of profit taking can't be ruled out. And that's exactly what the advanced decline ratio is indicating as well. 1700 stocks which are declining for about 840 stocks which are advancing. The mid-cap index at the lows of trade. Buying the dips in the last 10 to 15 days has worked a lot better than chasing rallies, and that perhaps may be the case today as well. Yesterday we had pointed out that, even as the Nifty and all the other indices were higher, the India VIX was up by about 9%. And today is the case as well. With the market moving higher, one would like the India VIX to be lower, but then again, the fact that it is moving higher tells you that there would be some sort of protection buying on the downside as well. But we're not the experts here, we're just analysts, and we have Shilpa Raut who joins in for a quick chart check on where the indices could go from here. Shilpa, has been a big rally that we've seen. Maybe is it time for pause for breath and buy the dips, or maybe you believe that this momentum will continue all the way up to expiry?
Good morning, Nigel and Mangalam, and thank you for having me on the show. I believe the momentum will keep extending towards 24,200, 24,500. At least during this expiry, we might see levels of 24,000 and above, hitting very likely. So, buying the intraday dips is also very much fine. You keep a stop loss of 20,650 and stay long, and you can see levels of 24,000 to 24,200 coming as well. For Bank Nifty, this sustenance above 52,000 is very crucial. If it does, then levels of 52,500 to 52,750 will also be hitting.
Okay, all right. Let's talk about a couple of stocks. And Shilpa, what's on your radar?
I have two buys. The first one would be a buy in Max Health. Max Health is looking too strong. We have seen the past 15 days as well. The stock has been gradually showing a lot of strength, and it is only continuing to do so. In April series also, I believe 1200 to 1220 targets should be getting hit very soon with a stop loss of 1140. So one can also trade in 1200 call option for April series at 42 rupees. Keep a stop loss of 30 and look for targets of 65 to 70. The other one would be a buy in Godrej CP. Godrej CP is also looking outstandingly, bullish, and the stock trading at around 1130 levels. I believe you keep a stop loss of 1100 and stay long and look for targets of 1180.
All right. Thanks a lot for that, Shilpa. Godrej Consumer is one of the buys that she has. Let's get you some more ideas of profit as well. We have our colleagues from Money Control Pro joining in. Nitin Agarwal is the one who's joining in today with the stock that he's tracking.
The company that I have chosen for today is eMudra Limited, a license certifying authority involved in issuing digital certificates in India. First, let me touch upon its Q3 number. The company recorded a YOY growth of around 42.6% in its top line, driven by 53% growth in its enterprise solution and 9% growth in its digital trust services. However, what continues to spook investors is the significant contraction in its EBITDA margin, primarily due to the regulatory changes. Now moving on to the outlook, there are a couple of factors that make us upbeat about the company. First, the digital trust services, which has been not performing well for last 3 quarters. However, the management has indicated that they have devised a strategy which will give them some pricing power and help company to improve its EBITDA margin, and the impact of which is expected to come in next 2 quarters. Moving on to the enterprise business, it is the place where the company continues to register significant growth. The company continues to have a strong deal wins and has a very strong pipeline in this particular business. The company got new businesses from APEC, Middle East, and Africa businesses. The management continues to be bullish on the company, and they have guided around 25 to 26% top line growth in the FY26 and bringing the EBITDA margin back to 23 to 24%. Now, in terms of valuation, after correcting significantly from its 52-week high due to the market volatility and the EBITDA margin contraction, the company currently trades at around 42.4 times, which we believe is reasonable and captures the whatever the negative the company had.
All right, with that, we'll slip into a short break with the news that a couple of stocks are doing fairly well. Piramal Pharma, for instance, is up around 7%. Remember, the stock has been a bit of an underperformer this year so far, down about 12%. Not too different from the way the mid-caps had been falling, but now seeing some pickup, and Piramal Pharma stands out because the other pharmaceutical stocks actually are underperforming in today's trading session, so just keep an eye out on that one. Take a short break, come back, focus on a lot of other stocks which are moving down. Now, a couple of broader markets names. We have Dixon Tech, which is down about 5% right now. It's, turned negative for the week after today's downtick. And not to say that there has been too much of a week behind us. We have Kalyan Jewellers, which is down about 3.5% as well. And HFCL is the other one from the F&O space, which is down about 3.5% as well. But let's focus on the CRDMO sector. Kotak has issued a note on the contract research and manufacturing, operations in pharmaceutical companies. They've initiated coverage on some stocks from that space. What does that mean? What are these stocks and what are they saying? Let's get across to Vinny. Vinny.
Hi, morning. So we're looking at this CRDMO space, which is contract research, development and manufacturing. So it's a sort of third-party manufacturing for pharmaceutical companies, right? So on the basis of that, they have initiated coverage on some of these names. Piramal Pharma, they have initiated the buy rating, target price of 300 rupees per share. Then they do have Syngene, which they're initiating coverage, buy rating on this one as well, target price of 700 rupees. And for Sai Life Sciences, they have initiated coverage, reduced rating, target price of 875 rupees per share. Now, what they believe as factors that we know that will support the CRDMO side is going to be in terms of the rising research and development outsourcing that has been increasing. The shift that we've been seeing coming in from China to other countries is something on the supply side from innovators, is something that will be the key for these companies in terms of orders as well as the inquiries that they've seen. Other than that, they expect this segment to actually, quadruple in the next decade. So that is an important one. And over the last few years, since 2005 to now also, they've seen a sharp jump up in terms of this segment, in terms of outsourcing, the spending that has come in for India. It's at around 42% now versus in 2005 it was just at 18%. So a lot that is playing out for these companies on the India front, CDMO side especially, and skill talent, low cost structure. These are some of the factors that will support the growth of these companies, and that is why they're positive on these stocks.
Okay, Vinny, thanks a lot for running us through that note. But Mangalam, tell us about Macquarie. They have written a note indicating their preference for restaurant companies over food delivery aggregators. Tell us more.
Yes, we had pointed out that there are things which are turning in the QSR space, as data in the recent past would tell you, and the growth rate of a lot of these food delivery aggregators were also lowering in terms of what they had done in the past to now itself. And now Macquarie has written that they prefer restaurants as higher discretionary incomes, which would come in on account of the tax cuts that were announced in the budget, would drive a recovery there more than food aggregators. In fact, in the food delivery aggregation space, gross order value growth driven by user additions and stable economics is what they expect, but they're cautious on Zomato and Swiggy. On the other hand, they prefer playing this theme. If you were to play the, eating out or food delivery sort of food theme itself, you play it via either Devyani International or Westlife Food World. Devyani International marginally in the green right now. Westlife Food World doing slightly better as well. There's been a leadership transition out there. But on the way down, they say that they're cautious on Zomato as well as Swiggy. These stocks are a wee bit under pressure. Now, a larger point here would be that, for Zomato and Swiggy, the big driver for margins would have been the food delivery business, whereas the investment areas would be quick commerce. If there is slowdown in the growth of food delivery itself, then how do you get the money to fund your quick commerce foray? Even if you do have cash on your balance sheet, the EBITDA multiples may perhaps come down, largely because the cash generator of your business is slowing down, whereas your investment in quick commerce is not. Whereas for the others, the quick service restaurant players, QSRs, they have been beaten down out of shape. So from current levels, valuations are a lot more supportive. And the other part is that, they've also figured out delivery versus the others. So maybe all those factors doing well for them. So if you have, names like Jubilant Foodworks, that's moving higher. You have, Devyani International and Westlife, all of them in focus too.
All right, Manglam, thanks a lot for that. Well, let's hop across to Vivek. He's here to tell us about Suzlon. That's moving in high in today's trading session. Brokerage firm Motilal Oswal has initiated coverage. Vivek, tell us more.
Well, that's right. Like you mentioned, it's Motilal Oswal that's written a note on Suzlon today, and they've initiated coverage on the stock. They have a buy rating. They have a target price of close to 70 rupees a share. What is it that they're targeting in terms of valuation? They see target valuations at 34 times December 26 EPS, which is a slight premium to the historical average 2-year forward P of 27 times. Now, what is it that the company has said, and what is it that Motilal Oswal is actually taking away? Company has said that they expect wind energy installations to reach approximately 4 gigawatt in FY25, 6 gigawatt in FY26, and 7 to 8 gigawatts annually from FY27 onwards. On the back of that, they expect Suzlon's order book execution to be close to 3.2 gigawatt in FY27, and they're estimating CAGR of 51%, 52%, and 63% of revenue, EBITDA, and adjusted PAT over the period of FY24 to FY27. They expect consolidated EBITDA margins to be in the range of 14 to 16% in FY25, 6, and 7. So overall, a positive note coming on Suzlon Energy, and this on the back of the fact that they expect wind energy installations to pick up materially from FY27.
Take that point, Vivek. Thanks a lot for that. Suzlon Energy has been a big mover in the past as well. Motilal Oswal believes there could be more for Suzlon Energy itself. Though the stock which is always in the news is Ola Electric, opened higher, thereafter saw a bit of a sell-off, currently at the low point of trade, and that's despite the company saying that they've cleared all their dues with the Rosmeta Group. Sudarshan joins in to get the details. Sudarshan.
Yeah, so it's a case between Rosmeta Group and Ola Electric. If you remember, last week, Rosmeta Group had alleged default and had moved NCLT Bengaluru in the same case. Now, today morning, Ola Electric disclosed to exchanges that the case between the company and Rosmeta Group has been resolved, and now Rosmeta Group has agreed to withdraw its petition from NCLT Bengaluru. And after Ola Electric's disclosure, even Rosmeta Group had disclosed same information, saying that yes, the disputes between both the companies have been resolved, and the group has received the amount of nearly rupees 27 crore that it was asking for from Ola Electric. And Rosmeta Group basically is the agency which registers the vehicles being sold by Ola Electric, and that's the reason Ola Electric had opened higher, but now it's in the red.
Okay, all right. Thanks a lot for that, Sudarshan. Well, time to slip in a short break. As we do that, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or Google Play Store, or simply just scan the QR code that's up for you on the screen. Well, the markets have come off a little bit from the top, and the reason is a few stocks have slipped. Pull up Mahindra and Mahindra, you'll see the intraday chart will tell you the picture. That stock has gone on, come in a little bit lower. You have IndusInd Bank, that's the one that was underperforming yesterday as well and continues to underperform even in today's trading session. And pull in a couple of other names. Adani Ports is lower as well as Nestle. So some of these names from the Nifty pack itself, they've seen a sharp slide from the high point of the day, which explains why now the markets are up only around 70 points. When we started off the show, we were up more than 100 points or thereabouts. But let's focus on the oil and gas space. Both ONGC, that's the oil producer, as well as OMC, which is the oil marketing companies. Sudarshan joins us to tell us about the news flow overnight and the impact on these stocks. Sudarshan, take it away.
So all the stocks that you have mentioned are currently in the red, and it's on the back of announcement of US President Donald Trump. He announced that he would be imposing 25% tariffs on all the countries that are planning to buy oil from Venezuela, and that tariff would be effective April 2. And because of that, ONGC is in the focus because ONGC has a subsidiary with the name of ONGC Videsh, which has 2 plants in Venezuela and produces oil. Second, ONGC Videsh was expecting $500 million in the form of more crude from Venezuela. This is the reason that ONGC is impacted. Why will OMCs be impacted? Because last month, if you remember, Oil Minister Hardeep Singh Puri had said that government is planning for OMCs to increase the oil imports from Venezuela, and that will unlikely be happening in the near future. And that's the reason OMCs are in the focus on the back of this news, and because of that, all the stocks are under pressure.
We take your point, Sudarshan, entirely. In fact, earlier today, we spoke with Prawal Sen, who's a senior research analyst at ICICI Securities, to understand the impact of this as well. Let's listen into what he had to say.
My understanding is that India imports close to about 0.2 to 0.25 million barrels a day of oil from Venezuela. When you consider that India's total imports are in the range of around 4.5 million barrels of oil per day, obviously it is a relatively small percentage compared to the percentage from, let's say, Middle East or even Russia, for that matter. But the fact is that if the condition for avoiding this additional 25% tariff is that this oil will have to be replaced, then that's an additional sourcing that you will have to find from somewhere. From a supply security perspective, I guess because it's less than 5% or less than 4% of our overall crude slate, it's something that I think India can figure out how to basically manage this hit, from what we can tell.
All right, it's an interesting day of trade. Even as the frontline indices are higher, we are seeing some sort of supply at higher levels itself. Every time the Nifty is crossing past that 23,800 mark, we are seeing some bit of supply. But at current levels, closer to 23,650, 23,700, we're also seeing some purchase. So it's likely to be that sort of consolidatory kind of day. It's interesting to see a couple of names which are, underperforming today. IndusInd Bank, now it has been an underperformer over the last 10-15 days, ever since the news of the forex related, derivatives related loss did come by. In fact, even before that, when we had Sumant Katpalia's extension, which was given for just 1 year as against the expected 3 years, the stock has been under pressure, and now it continues to reel under pressure. Yesterday as well was lower. Now this week's losses on IndusInd Bank make it 6%, and from the top itself, the stock has corrected about 60%. Remember, it's the expiry week. The stock is still in F&O band. The other one that stands out in terms of losses is Dr. Reddy's. We've seen a bunch of stocks in the pharmaceutical space underperform. Dr. Reddy's leading that pack, though, as Vinny told us earlier, Piramal Pharma higher on account of the note that has come in from Kotak. And the third stock I'm looking at is Kalyan Jewellers. Again, the stock has been a beaten down name, was seeing some sort of recovery from the lows, but once again, it's come off the highs. Currently below the 500 rupee mark on Kalyan Jewellers. 472 is where the stock is at the low point of trade. But a bunch of stocks moving around, Nigel.
Well, that's right. Well, I think on that note, though, we've completely run out of time on this edition of Chartbusters. You stay with us. Trading Hour comes up next.